Hello, thank you very much. Yeah, I wanna concentrate in this discussion about stablecoins and make some predictions what I think about the year 2026. So we dive into the topic regulation, settlement, and global payment roles. As said, I'm a senior manager with Bullish, and let's start with that. Thank you. You all have these moments where you still remember what I have done this specific moment, so like 9/11, right? And for me, that moment was the 10th of March 2023. It's not properly visible here, but the Silicon Valley Bank actually collapsed, and that caused the so-called USDC Depeg. For those of you who don't know that, USDC was that time the second biggest stablecoin in the world, still is one of the biggest in the world. And interesting here is the fact that at the end of the day, the Silicon Valley Bank and Circle announced that they had holdings and deposits of 3.3 billion, which represented 8% of their total assets with the Silicon Valley Bank, and that finally caused that this bank collapsed and caused this specific USDC Depeg. Why it was so relevant? Because at those days I worked for Coinbase, and Coinbase was one of those companies which had a consortium, or like a joint venture, if you want, with Circle. And finally, Circle took over that consortium. And the result you see here, it's a kind of spreading virus. We had a Depeg on the DAI side, so that was another stablecoin. We had in the DeFi market outflows from USDC and DAI itself, and strong inflows to USD, which caused also that we had technically an oversupply in USDT. So you see it with a price of 1.03 per US dollar, right? And if you think about that, that came as a result, despite the fact that there existed still rumors that Tether is unbacked, or at least some parts of Tether are not backed, right? And you see here the outcome on the right side. Technically, it was a default in the banking sector, and finally the impact was done in the crypto sector. And that caused the fact that regulators around the world started creating regulation. And I start here on the left side with the MiCA regulation that was in 2024 created as a, if you want, it's a single rule book combining aspects of stablecoin and also regulating aspects of the so-called CASP, so crypto asset service provider. And United States took longer. And maybe you have heard it, in 2025, the United States adopted a so-called Genius Act, so regulating finally stablecoins, and which is here not good visible on the right side. It still causes the impact that US has a, if you want, a patchwork of legislation. So you have heard about that. The fight with the SEC, Gary Gensler, maybe you have heard that. Yeah, this is still one of the aspects existing and a problem in the crypto environment in the United States. Maybe you have heard it also last week. There was from the banking Senate, from the banking consortium of the US Senate, there was a decision that the Clarity Act might come into force. So it's still not valid, but the Clarity Act should actually clarify this situation. This is how Europe, just a few points I want to highlight here, how European regulation works actually. And so finally you distinguish here Europe on Europe level between so-called RTs and EMTs, and differentiation is pretty simple. If you have a combination of some assets, it could be a commodity, it could be like a currency, then we are speaking about RTs, so asset reference token, and on the other side EMTs reflecting something which is directly bound to the currency itself, so it could be a euro, it could be a USD or what else. And Europe has also created to protect the holders a 101 reserve. So also the issuer of that stablecoin is obliged to hold the specific assets in specific banks and to a specific amount. Also the holders, they have also the right for redemption at pair. So that's a kind of unconditional right to, to redeem the assets. And technically, I mentioned that idea with the Silicon Valley Bank, that would have not happened if those regulations would already have been implemented, right? Also, one thing to highlight here is the interest prohibition. So the European regulation clearly says that for stablecoins, there's no right to create a kind of interest. As mentioned, the Genius Act said 2025, just clarify like 5 bullet points. They have as well here a so-called 101 reserve. And interesting here that the reserve can only lie with cash, demand deposits, and so-called T-bills. So T-bills, if you want, it's a bond issued by the governance, means the issuer has then the right to hold such to hold the reserves in such aspects. And interesting here is no commercial papers has been allowed, which that you have an idea. Okay, what's the difference? Commercial papers, T-bills, commercial papers, something like an issued bond by a specific company, and so that actually also caused that what happened with the Silicon Valley Bank, that they had too much exposure in such commercial papers like issued by the bank, issued by specific companies, and so in order to avoid that, that was also implemented into the Genius Act regulation. So holder have also a priority right in case of insolvency, a so-called first priority claim, and the United States is kind of carving out the situation of stablecoins. Means you have specifically the point securities, which is regulated under SEC. You have specifically the point of commodity, which is regulated under CFTC. And then you have a kind of new asset class, which is called stablecoin, right? Sorry that this is not visible here, but this is the stablecoin. This is in contrast, to bring into contrast with stablecoin how the global assets are distributed. And so it is technically around 900 trillion, so that what represents all values in the world. And if you break that down to just Bitcoin, it always reflects the evaluation of Bitcoin, but you come here then to an evaluation of Bitcoin to 2 trillion, but the whole money market, so the whole fiat sector, right, represents 120 trillion, which is interesting because when we look on the next slide, this actually represents the distribution of that, if you want 120 trillion into the fiat market, then you see there is a strong dominance of the United States dollar, and euro has a second place. So if you count both together, we have around 85% just belonging to those regions. And technically, and this is the harsh truth here, if you combine that or check that in comparison how the stable market looks like, then you will see there's a strong gap and a strong difference here. So we have a multiple of 338 in the evaluation. If you just take the market evaluation or the market cap from the European stablecoin market, which reflects at the current stage, so like 0.29% of the stablecoin market, which is, I think, really impressive, because if you also understand MiCA, like European regulator is creating a lot of regulation for that, and technically there's no taking off here. If I break down one level more and we check how the European market is divided, then you see technically there is no RT issuer existing. So RT, as I said, it's a basket. After 2 years regulation, no issuer is still existing. What on the other side we have are authorized EMT issuers, so reflecting to a specific or patching to a specific currency. And on the left side you can see them and operating. Interestingly, they are operating in those countries here. And France kind of has established as a blueprint for EMT issuers. For CASPs, it's different. It's still Germany. And interesting here is the fact that although it's Germany, we have it's Europe, sorry. We have still 17 euro-denominated stable coins, but already 9 of them are located also as USD-dominated stable coins. This is hopefully not too provocative question what the stablecoin market in comparison to United States is doing. And here you can see if you take the market evaluation of Europe stablecoins, then you can actually see that the blue line is Circle. Circle is the only stablecoin in the European market taking off. The other stablecoins, plus minus, they are pretty the same level operating. And interestingly also, when you see how the adoption of the market happens, then the most of the participants in the European environment, they know and they have used stablecoins, right? And paradox here is the fact that in the questionnaire, the question was, do you use that stablecoin for making investments or for trading? And technically, if I would like imagine, okay, stablecoin normally is not evaluating. Normally, it's not per se used for investing and trading, of course, as a tool for, you know, rebalancing or so. But technically, my understanding is stablecoin should be used for payments. But there you see the survey created like this outcome that it's really lower adoption here. I have for you one use case. So this is the use case from SpaceX, and SpaceX applies that use case in South America and in Africa. So you take a country where you have a domestic currency which normally inflates strongly, like take Argentina or like take Nigeria, and you collect then from local people the local currency, and then use a provider, a payment provider. In this case, it was Stripe used. You know, Stripe acquired Bridge, and in this case, Bridge is the operating underlying payment infrastructure. So they convert the local currency into a specific stablecoin, you know, in best case in USDC or in any other valid stablecoin. And that caused the positive impact that you completely lower your foreign exchange risk, right? So you don't have to participate in these swings. You completely reduce the costs. You have no, you know, correspondence banking activity. You have no SWIFT interaction, and you have a settlement which is taking like atomically happening, right? So in minutes or seconds rather than in days or what else if you're using the conventional banking sector. And so I want to end my points here with 5 predictions and to open the floor for discussion, and take that just as just a remark with buzzwords, but don't take it too offensive what I'm writing here. So my 5 predictions. We have seen that the Genius Act is enabling the factor that participants buying finally T-bills. My guess is that the US is using that as a means to continue the dollar dominance, and I wrote it as dollar dominance defended through code and not through gunboats, right? The second prediction is the European Union will not properly good with the fact of MiCA and regulation. MiCA is a kind of, for stablecoins, I would say, a regulatory cage. And finally, Europe will be the place to regulate stablecoins, but I guess not really like a market where coins or like stablecoins will be issued. The third prediction is the digital euro, so a CBDC. We have heard already today that has nothing to do with the stable market or with the crypto market itself. But my guess is the ECB will use that as a means to strongly, adopt the usage of CBDC and kind of exclude the stablecoin market. And my last two predictions: Tether as a blueprint will continue to operate in the market, and so will reach total evaluation higher than 300 billion. They will continue operate from El Salvador, right? They will continue the usage in emerging markets. And of course, if you take the global distribution, I have pointed that out, 95% of the USDT volume happens outside the Western Hemisphere, right? So that's what I have shown you with MiCA, with Clarity Act, and with Genius Act. Technically, not relevant for the world if you take the USDT. And last point is that the stable coins, they will be more adopted, and it's not about a coin, it's about payment logic. And yeah, therefore traditional finance sector should ask themselves, we want to participate here or not. And with that, thank you for your attention.